We just talked about the S&P equal weight up only 0.25%. I'm looking at the Magnificent Seven right now, up over 80% year to date. So my question to you, is this sustainable? Can this keep going? And what does this mean about the direction of the markets?
So I would say, looking at history, some people would worry that, you have a situation where those Magnificent Seven, frankly, fall apart, and then that really crushes the overall indexes. That is not always the way it happens. Sometimes the market broadens out. There's really no clear sign of that. I guess I'm optimistic that we might get some broadening out. I think, maybe this third quarter reporting season that really kicks off in earnest end of next week might give us that, because you're finally going to snap, I believe, the streak of 3 straight quarters of year-over-year declines in earnings. I think you're going to have positive earnings driven a lot by some of those Magnificent Seven, frankly, but hopefully we'll see some better numbers out of some other sectors as well.
All right, I just want to be clear. That means that you're not at all concerned about the narrowness of this market. You believe this rally can continue with just 7 or maybe a dozen stocks continuing to push the markets higher?
No, I think it has to broaden out to keep it going. I'm a believer in AI and a lot of this technology, but I would say we've kind of trimmed some of them on the margin because they've gotten expensive. I think you have to look for a broadening out. I think that's exactly what you have to hope for here.
All right, so you're touching on the earnings season that begins just next week. So according to FactSet, we're on pace for a 4th straight quarter of earnings decline, something you just referenced right now. Earnings for Q3 forecast to be down 0.1%. What does that mean for the market? If we come in line or we don't even reach that, what does that mean for the market? I know you said you are optimistic, but, the forecast is the forecast.
It is. I think typically, as you can usually bet on us coming in somewhat above it. Doesn't always happen, obviously, but certainly we need some better earnings, because I think what I would argue has been pressuring the market and why we're off the highs overall is really the rise in interest rates. I like the Buffett quote that, interest rates are like gravity for stocks. So we've really seen a sharp rise, particularly in the, I call it after inflation expectations. So real interest rates, which is I'll argue the more potent of the two. So, those interest rates are really, a good competitor at the moment to stocks. So you need the earnings side to lift you there. And I think, that's what you've got to look for.